What's good? What's good? What's good?
Back with
Back
another
with another episode of Over the Counter Podcast.
one.
We are the Good Brothers of OTC, man. Back from vacation, feeling recharged,
Yeah,
feeling ready to hit the ground running. A little bit more motivated than when we left.
for sure.
At least
Yeah,
I am. I can speak for myself.
for
I am.
sure. Definitely. Definitely.
Um, Sometimes when you step back and kind of just, enjoy the scenery and sniff the flowers, you get reminded of why you work so hard for the things in which you have. You get reminded of why, at least, you're trying so hard, or working so hard. So, at least I do. That was definitely a good time. Couldn't even find any time to pod. Let me just say that. Like, it was a lot going on. It was a lot going on. Pods were planned several nights, and
Yeah.
the generals, of course, said otherwise.
Hey,
So
man. Definitely always inspired when I go on vacation. Able to see that's part of like we was talking about when we was actually on vacation. That's part of one of the things that inspired me at a young age in like eighth, ninth grade, taking my first vacation to I think it was I went to New York and especially being from Oklahoma where we're from, it's not much, you know, glam and a lot of fancy, nice, crazy things. So when you go out of town, you see another side of life. You see whether it's a nicer property, shopping, architecture, sightseeing, all that kind of stuff. You see people living a different lifestyle. Opens up your mind to a lot of things. So always inspired when I go out of town. Always.
definitely, definitely. And even though we were relaxing and enjoying, the time, outside was not. The markets were not. News never stops. So we got a lot to talk about today. Getting back into it. We got talks of recession finally, like serious talks of recession, not just no, we really don't want to say that word. I don't know what you're talking about. Yada yada yada. People are actually talking about recession now, so that's very interesting to me. I want to get into private equity and what I like to call a potential ticking time bomb. I've been seeing a lot more people discuss the issue going on or the issues they see arising in private equity. And because most people are not accredited investors and have access to private equity, don't really know what's going on in those markets. So we'll definitely get into some of that. We'll get into some updated investing strategies, 401k investing, and so on and so forth. And then we're gonna get into some chart mechanics. Definitely gonna pull up the charts. It's one of those episodes. So we got a lot to get into. So without further ado, let's go ahead and get to it. Bruh, tell me why. They must have heard us. They must have heard us from the last pod. They must have heard us from the last pod because now they talking about recession fears. Economists. They looking at lower growth rate for the year than what they originally projected. Investors, they're worried about lower rates for the most part. Are you going to make investing easier and cheaper? Are you going to make money cheaper? Bro, I could have sworn I said Trump is playing 4D chess with these tariffs. And that's how he's going to impact the markets and essentially force Jerome Powell to lower rates. Hey, now they talking about lowering rates. So I ain't saying I got a crystal ball or nothing, but you know, definitely kind of saw something like that happening.
And what I'll say this, with I think Trump. I think a lot of people are starting to wake up to the fact. Of course, we thought Trump coming in with a lot of his plans were going to. A lot of people thought it would revitalize the markets. It would give us, some clarity around things like crypto. We would get a economy or an administration that would create a healthier landscape for the stock market, for crypto, and those type of things. But we heard you talked about earlier last year about them not necessarily giving us the real when it comes to the economy, the health of the economy. The
Mm-hmm.
talked about the numbers, not being accurate, and we even said earlier last year that that was one of the things we're going to be watching for. Will they actually start reporting real numbers? Will we get the real? And I think he's done a lot of things that he spoke that he would do, but I think a lot of people are I think a lot of people are surprised actually, because we spoke about the potential negative catalyst that it could arise. But I think a lot of people were in euphoria when he first came in because stock market was going crazy. You're getting all
Right.
no news, but like you said, man, I think a lot of the things he's doing is bringing about the real landscape of the stock market, setting things back where it should have been. You're not seeing as much euphoria. Same thing with crypto, and broader into mortgage rates, interest rates. Now people are talking about a housing crash after we heard that there wouldn't be a housing crash. So it's a lot of things going on, man. And like we're not even 6 months
This
in.
first quarter is over with,
Not even
basically.
6 months in. Yeah, it's gonna
And
be a road.
bro, and I know we both kind of, or at least me, I definitely said that I think first quarter would be bloody, and
Mhm.
then the rest of the year is up. But I think now I'm leaning toward more. The rest of the year it might be up.
That's what I said. And that's what I said last pod, bro. I think that
That's
well, of course, we was talking Q1, but I think as things have transpired, I'm saying
hmm
first year might be.
It might be rough. And we have a saying in crypto. Builders they build regardless, right? And I think the same can be said across all markets, right? Those who are built to withstand bear markets or turbulent times, they will survive. Those who only survive off of hype with no real utility, use case, nothing, they will die off because then when things get good again in the crypto space, they're gonna come back to life anyway, or respawn, totally different things. All those things always pop up here and there. But those who can stay alive and keep progressing, keep building, keep improving, even during those turbulent times, those are who we should keep our eyes on, and those who will indeed survive through it all. So, even with the stock market, you got Nvidias, those types of plays. I definitely think they ain't going nowhere, especially after what I just watched. That GTC keynote was pretty impressive, in my opinion. But we'll see how the market reacts to that later. Um, so in terms of recession, I'm not too worried about that, right? But I definitely find it interesting that now we're really seriously having to talk about lowering rates, because investors they're really not investing as much as they probably would be if the overall economic outlook was looking good. Because investors, they looking at the economists they looking at the investors, and and the economist is like, yo, we projected like 2.4, 2.5% year over year growth for 2025, and we happen to pull that back down to like barely a percent. So what does that mean? That mean investors they ain't investing as much. Why? Because of the overall market outlook, overall sentiment of the economy. It's getting harder and harder out here to justify investing in certain places as much as they would have. So they pulling back, regardless of what these bigger companies like Apple are doing, investing in the country with these major billion-dollar investing contracts. So I find that interesting because um, now bigger companies, these bigger entities, they feeling it on the same level or similar levels like retail is. So it's very interesting to see how, the minute these big entities, private equity and things of that nature start feeling these things that retail investment feels like from jump,
Mhm.
they kind of react the same, like, I gotta chill on my spending, gotta make sure my capital expense isn't so high.
You want to know what's interesting about that is when you're talking about the market being more defensive, people not as willing to invest or being really particular about what asset class to invest in and when.
hmm
We're not even we're only, if you look at the numbers just for S&P 500 and the Nasdaq, just the indexes, not any individual stocks. We're not in bear market territory.
Right.
We're not even in correction territory technically. We are just in a pullback, which is generally 5 to 10%. If you look at the S&P 500 year to date, it's only down 4.5%. If you look at Nasdaq, Nasdaq year to date is down 9.3. So things haven't even really got
Gotten bad yet.
crazy yet
Yeah.
in the grand
And
scheme of things.
and I think that's the interesting part because if we just dipping our toe in and y'all acting like this, what does it look like when we in full on correction in bear market territory? What does that look like? Because,
Plus
you
percent.
know, bruh, so that's a good segue into the private equity topic because let me just lay the groundwork. There's a difference between publicly traded companies and companies that are on the private market where you have to meet certain criteria, especially when it comes to net worth, to even be able to invest in these companies well before they're available to the public, right? So that's essentially what private equity is. Private equity, in the grand scheme of things, is almost like a black hole for liquidity, and they're a black hole because they're not really regulated like the public markets are. So that's why they put all these different requirements around being able to invest in these companies, mainly because they feel like the normal average person is not savvy enough to potentially withstand losses or what have you with private equity. So, just wanted to lay that groundwork. So, specifically, what has been going on in the private equity markets is that they've been pulling essentially, these loans from these companies like Jones, they're going bankrupt. Hooters, they're going bankrupt, right? Even though they're like damn near 97% profitable. So these companies are still profitable, yet they're going bankrupt. That doesn't make any sense to me, right? That doesn't make any sense whatsoever, right? So then when you dig a little deeper, come to find out, they've taken out these private equity firms, they've taken out essentially $3.8 trillion in adjustable rate loans, right? So what's going on is these banks don't plan on having these on the books. So what's happening is these banks, the minute they sign one of these loans, like private equity firms, they go to a bank to get the loan. Minute the bank signs one of these loans, they're essentially repackaging that debt and then they're selling it off to pension funds as good debt. So in that whole equation, who do you think is going to take the hit? You got private equity, you got uh, banks, and you got pension funds. Out of those three, who do you think is going to take the hit?
It ain't gonna be the banks.
You already know it ain't going to be the banks. If the pension funds don't have as much bread as the private equity or as much insulation as the private equity is going to be okay. So that leaves pension funds,
I mean,
and that's going to be that's nasty,
I mean, that's always the most disposable.
right? I mean, they did it in 2008, so it's almost like, but apparently, according to these people that I've essentially gotten this information from, just research, every 30 to 60 days, the interest on those loans increases. So you already took out $3.8 trillion, right? So say they took it out at 1% when rates were 1%, right? So you were easily able to get money cheaply. But if you signed adjustable rate loans, that means your rate can change
It's
on that
it's
same amount of money.
it's really insane that anybody,
Why?
if anybody would ever do that.
Why? I don't get it. And they call them back floating rate loans. That means they're tacking it on the back end.
I
The
guess that's
back end.
how they make their money.
Right, but that's why these businesses that are still profitable, 97% or in that 90% range of profitability, they're still going bankrupt. That's crazy.
I
That's
think that's
crazy.
I think that's where people really need to know like the fundamentals and how that stuff actually works. Because just because a company is profitable,
Right.
you got to break down, how much they spend on over. You need to look. We really need to see. We need to see cash flow. How much cash
Really,
flow
truly.
have, because yeah, you can be profitable, but once you pay for all of your expenses, all of that kind of
What you
stuff,
got left?
and a lot of these companies, especially when you get outside of the tech sector,
Hmm.
a lot of these companies don't have a lot of free cash laying around or assets
Right.
that you just go pull the money from, you know. So they essentially pay the paycheck to paycheck.
Right. Okay. Right. Perfect. Perfect. Perfect analogy. Right. Paycheck to paycheck. But let's go deeper. Jones is a retail shopping store, right? Like, I mean, it's think of like a Kohl's or a bougie TJ Maxx, right? That's what that is. Hooters, that's food restaurant, right? Sports, entertainment, that type of stuff. You mean to tell me people aren't buying like clothes, shoes, little knickknacks, housing items, that type of stuff enough to keep Jones open or keep Jones from going bankrupt, even though their private equity firm that's backing them signed up for a back floating rate loan. I don't know what the interest rate is, but if it's the national average, that's insane. That's a lot. That's a lot of interest on the back end. So what does that tell me? That tells me that people aren't shopping enough. People, regular everyday people, are not letting go of their dollars to buy these more material items as much. Hooters, and the example of Hooters, that's telling me that people aren't spending their money on food to eat out, to be entertained, leisure stuff like that as much as they used to keep Hooters from closing their doors. And then these aren't just the only two examples. There's like several others that I found.
I'll give you another one. We were just in. Well, I don't necessarily know that they're profitable. Just poses another question. We were just in Vegas. All Forever 21s are closing.
Yep.
We know that is kind of a more affordable option,
Hmm.
fast fashion, all of that type of stuff. Another thing that it makes me
Express.
Another thing that it makes me think about, are these private equity firms, are they transitioning their portfolios towards, because we know in the case of Forever 21, you got places like Sheen, Team,
Hmm.
even some of the other ones you just named. You got Amazon. Are times of transition, and people are not necessarily wanting to even leave the house to shop nowadays. And if they are willing to shop, they're going to go the cheaper route, especially in times of economic concern. So it's a lot going on. It's a lot going on.
Absolutely. Absolutely. I just, when you go down that rabbit hole, it's very interesting that these private equity firms would be so, to me this is reckless. Even if when you took these loans out, you took them out at 1%, so it was nothing, you know what I'm saying, at the time. But fam, it's an adjustable rate loan. So like
That's crazy.
I don't care how much money I'm working with, bro. Like, and the more money you working with, the higher 1% even is. You know what I'm saying? So like
I want
rates
stability.
is damn near 8%.
If I'm getting a loan, I want stability. I want to,
Right.
especially if I'm thinking from the mindset of a CEO, CFO. All right, we're taking on this loan. I want stability. I want to know that a year from now, 2 years from now, three, four, five, however long we have this loan, I want to know that this interest rate is going to be stable. Because if the interest rate is floating, for our profits raised, which is we would even be taking on debt to, of course, invest into the business, research and development, to buy more storefronts, whatever it is. What kind of plan is it to, yeah, if you're going to do that and generate more profits, but that interest rate on that loan is increasing over time with the profits?
Exactly. So you're not really getting anywhere. You're
Yeah.
not you're not really getting anywhere. And eventually the interest owed on that loan outpaces your cash flow. So
Mhm.
that's why I would go bankrupt. If I'm the private equity firm and I'm seeing this, I'm like, dog, you ain't never gonna get out this hole.
Another
So
aspect
what's the
is why aren't other businesses that are in a better financial position, why aren't they willing to acquire a lot of these companies? that are getting into bankruptcy situations.
Do you want the operational overhead? Probably not. I mean, how much does getting chicken wings off a truck cost at that rate? You
So
feel me? Like,
that just shows you not only are retail investors, if you are now on the fence, got private equity on the fence, and then you even have other businesses. Again, I say outside of tech because it's just tech. They just a whole another monster. A lot of these other, they're not wanting to get acquired for. Like even like Forever 21, I'm looking at. They talked to over 200 different potential buyers. Couldn't find anyone to, and we don't even know about the other businesses you talk to potentially. Other buyers. So even in the airline industry, you even have other Spirit. I think it was Spirit, or was it? It was one of those airlines who were filing bankruptcy and they were trying to get acquired.
mhm.
The
Yeah,
market,
Spirit's going bankrupt. Southwest CEO literally spoke out why as to why they even went with the charge bag policy versus the free bag policy, check bag policy. I mean, he like, yo, we trying to get profitable again. So like that just goes to show you, dog. It's I don't know who I was talking to, but I was like, he was like, bro, you can't really tell that the economy ain't going to hell, you know? And I was just like, yeah, you can. This is all of this is an illusion, bro. What you see what we saw in Vegas was
yeah.
not real.
I mean, that's why they talk about the credit card epidemic and this and that. What we seeing is not, it's not the real thing when you look at one, people losing their homes,
Yep.
delinquencies on vehicles, the amount of debt people are taking on in credit cards, people not even being able to afford homes, the student loan crisis. The science is out there.
They everywhere. So that's why like a couple years ago, even this was well before the election even was coming up, man. We were talking about how like because I think even me and you had this conversation a while back. It's just like, dog, none of this is real. There's no way you can't tell me that you can read off these numbers, understand what they all mean, and then go look outside and what you see outside don't match the numbers. You cannot tell me that's real, bro. People, there has got to be an excess in debt somewhere. Like people are so racked up in debt all across the board. For most people are. I'll say that. Most people are. And that's how you're able to see what you see on social media. That's how you're able to see when you go to these bigger cities. It's not that the fact that they can take out that in cash and be like, boom, pay it, whatever. Most people don't even carry cash these days. It's all credit cards. It's all digital, that type of stuff. So when you think about these private equity firms, when you think about the credit card epidemic, bro, it's like everybody is in debt. Everybody. It's all about to me. It's all about who gonna default on their debt first.
And that go all the way from us to
Right.
governments to businesses. The entire world runs on debt, IOUs. You know,
Yeah.
if
And if
every
you ain't managing it right, you can get caught.
if
You
the
can get caught.
government got caught on everything they owe, 36 trillion, we're done. If even a company like Tesla or some of the biggest companies you could think of, if they all got caught on their debt, they're done. You look at some of these companies' assets that they can go and actually pull from within in a year's time. Those numbers aren't
Nah.
everything.
Nah.
Everything
Nah.
is running off, everything is running off debt, and that's why them adjustable rates is insane. Even
That's
house,
nuts to
that's one of
me.
the first things they tell you. No, no balloon,
Boy,
no balloon.
never get an adjustable rate loan, especially for a house. And that just goes to show you, gives an example of, the type of interaction a retail customer would be with would encounter an adjustable rate loan. So uh the fact that it's not just on the retail side of things, it's also on private equity and up. Bro, it's happening everywhere. But man, definitely want to pivot into that because in order to insulate yourself from that, you gotta have a solid investing strategy. Because up or down, you got to have at a certain point, man, you got to have an investing strategy. And there's strategies for both types of times that the markets are going to be having. So I've been sharing the fact that I am shifting, or at least including in my focus, more defensive type plays. And one of my number one defensive type plays has been investing into gold. So my official numbers for 2025 are 50% crypto, 50% gold. And that might float more so on the gold side, away from crypto as the year goes on. It just depends on how bad it gets. Um, Mainly because if you look at the gold numbers, everything been reacting to these tariffs, this, that, and the third. Gold just reached a new all-time high a few days ago. You
Yeah, I
feel
think
me? So
we talked about that last time.
boy, so gold is definitely where I'm looking at. At that high of a allocation, I definitely just want to make sure that things are insulated. I'm insulated as we go into 2025, especially they talking about lowering rates, that type of stuff. If they do lower rates, crypto historically takes off, but we gonna see. Stock market typically takes off historically, but we gonna see. I just think that I need to be prepared for any and all circumstances. So even on the downside, when crypto is experiencing down times like it is now, I need to have a solid hedge against that. So I definitely want to discuss more strategies. I mean, you were talking about a 401k investing strategy that I found really interesting. So I definitely want you to get into that.
So before I get into that, let me say two things about you spoke on gold. Gold right now, $3,041.30. And year to date, it's even up higher than we talked about last week. It's up 16.7%. Everything else is in the red. So when you're talking about gold, I think that gold is one of those things that traditionally people look at it as just a store of value. You know, it can protect, your money, your assets. Something that's not as volatile where you won't lose money. But now, the times we in, not only is gold protecting the money, but it's making money. 16%
Right.
year to date. I think people have gotten used to crazy returns,
Hmm.
but average uh, great returns a few years ago was what, like 7 to 10%.
Yeah.
That was great returns. Now you're talking about gold doing 16.7 a couple of months. So gold is definitely one of those things that I think it should be. I'm learning. I think it should be a part of everybody's portfolio, at least in some shape or form, even if you don't go too heavy on it.
Right. And there's different ways that you can invest in that. Because you can have third party companies custody your gold, so you don't necessarily have to have it on you physically. Or you could go, old school style, have bricks, have bricks on you, bricks of gold, have a safety deposit box, or have it stowed off somewhere in a bank. I wouldn't necessarily recommend keeping a whole lot of gold bricks on you in a safe at the crib or anything like that. But there's ways to do it. And I'm finding out, bro, as I've been learning more about gold, they have this concept of leases where you can lease out your gold and companies will pay you like 4%,
That's not bad.
4%
That's more
a
than that's
year, bro, on my gold holdings. That's not bad.
more than you get in a bank account letting your cash sit. It's a thing.
Right. So it's like, dang, I didn't even know you could do that. And say you had like, and these is just numbers. These is just numbers. None of this is official. Nothing like that. It's just me doing some back of the napkin type math. You know what I'm saying? Say you had like 100 ounces, right? They paying you 4%. Bro, that's 24,000 a year in interest. I mean, that's paying something.
Sound good to me.
Sound good, sound good to me. I can
When-
find whatever else I need everywhere, anywhere other way that I'm gonna make bread. So I mean, when you really start thinking about stuff like this, so not only are you protecting your cash, it's potentially increasing as a hedge against inflation itself, in my opinion. And then you're able to earn an additional passive income with it, bruh. And as gold increases in price, say it hit $3,050. Well, now I'm getting paid on $3,050 per my hundred, per my ounce. So I got 100 ounces. So now I'm getting paid 4% on that.
Yep. And
I'm
and
I'm good. I'm good with that. I'm good with that. So
and
it's
then,
definitely some plays I'll be looking into as my gold holdings increase for sure.
yeah, and then like you talked about before I get into the 401k stuff, lowering interest rates typically having a good reaction, crypto stock markets. Well, y'all gotta watch out for quantitative easing. And y'all can't get lulled into a false sense of security because that is just a way to put a band-aid on the issue. They already did that in 2020.
Hmm.
They already did that in 2020, and you see where it led us in the long term. So
And you know what's crazy? I know I wasn't doing videos or anything like that, but I said this in 2020. I swear to God I did. I swear I did. I swear I told these people, bro, the rate in which we're printing money is not good. These stimulus checks, all of this stuff is not good, bro. You about to go spend that $1,200 on some BS, and then you gonna need it later. Like that $1,200 is gonna cost you more in the long run, and that $1,200 is gonna be triple, quadruple what that value was later, and
yeah,
what you gonna have to pay back.
it's the equivalent of being tired and drinking an energy drink instead of going to sleep.
Right,
Give yourself a little bit of juice to just go a little bit more, instead of really resetting.
right.
So
And now we
gotta
here.
gotta
You
watch
know,
out for quantitative easing. We'll see
that's a
how.
good point.
Yeah, but 401k, we're going to break down some statistics really quick because as I was doing research, it's something we already knew, but I wanted to get some statistics to share with y'all in regards to 401k before we get talking about the strategy. And this is for everybody, but specifically for Black households, Black families, because we are in last place. And in 2025, that should not be the case. It's ridiculous. The information is everywhere. So I'm gonna get into some of these statistics. And the first one, as of 2022, approximately 39% of Black American families own stocks, as opposed to 66% of white families owning stocks. And this is from Pew Research Center. That's
Damn,
that's sad. You know,
more than half.
and I said on Instagram, we was gonna get into the harsh truth, so we're not gonna filter it.
Right.
A lot of
Let's get
times,
to it.
a lot of times, the Black households we like to blame everybody else. The white man this and that, all these obstacles. I'm gonna tell you right now, every job I've worked at had a 401k except for Quick Trip, maybe. They may have it. I probably just wasn't putting in it. I was like 18. But every job I've had 401k. And every job I've went to, I've put into a 401k. So for these numbers to be this crazy, it's either two things. Either people don't know about a 401k, which sounds kind of crazy at this point because even if you're not invested in one, I don't know anybody who doesn't know what a 401k is. Maybe they don't
Hmm.
know, really how to use it, or they just don't care. You know, living day to day, I'm not thinking about when I'm 60, 65, none of that, which is crazy. Now it gets worse. Let's go to more. The median value of total stock holdings among Black families in 2022 was $16,500, as opposed to 67,800 for white families. The numbers is insane. Now we go on to the average 401k account balance, and this is ages 55 to 59. And we're going to break this down by not only demographic but by men and women. So Black men, the average, again, 55 to 59 years old, 145k. Black women was at 130k. White men, 403k. White women, 328k. Asian men, 379k. Asian women, 401k. Hispanic men, 231k. Hispanic women, 192k. So we are in dead last place. The average 401k account balance for black men at 145K is less. We're not even gonna get to the men.
145?
We're getting beat by white women, Asian women, and Hispanic women. We're not even talking about men because we're not even in the same stratosphere.
Right.
We're just talking about the women, and we still in last. Gotta do better. Let's keep going. More than 50% of Black Americans have no access to a workplace retirement plan at all. So
Mm.
that gets into education level and the type of jobs that we're
That
holding.
you can even go after.
That's another conversation. We'll save that. 50% of Black Americans don't even have access to a 401k. So that means they're not even working at a job, that has that type of benefit.
I mean,
Now,
we definitely gonna have to get into like trade school, college, all that stuff because there's options out there. I don't
def-
care what it is, there's options.
definitely, and that goes into another broader topic of the Black men having the
Hmm.
highest incarceration rate. A lot of different things that can factor into these numbers. Then we go to stock market participation. This is where it starts getting a little more positive, and this started to turn around really post COVID, going into 2022, which is the latest numbers. We'll have to wait for new ones. But stock market participation is higher among younger Black Americans, with 68% of Black investors under the age of 40 investing, as opposed to 57% of younger white investors. So 40 age 40 and under, as of 2022, according to Charles Schwab, the young Black American, we're starting to wake up. We're starting to
Right.
wake up. We're starting to gain some traction. And these last two statistics I'm about to read off, I found highly interesting, but it makes a lot of sense. It makes a lot of sense, especially living through COVID 2020 era to now. Black investors under the age of 40, 38% own crypto, as opposed to 29% of white investors under 40 owning crypto. And Black investors are more than twice as likely to say cryptocurrency was their first investment. 11% of Black investors, that's the case, and only
That
4,
makes
and only 4% of white investors.
Hey, so we cooking. In that realm, we cooking. We cooking. And that makes a lot of sense, bro. And but at the same time, no. See,
What are we
those numbers
investing?
sound
What
the
are
numbers sound great. What are you investing in?
that's the first question that popped into my mind, because we're seeing these percentages, but we're not seeing it, in them portfolios. So is it
Nah.
meme coins? Is it
Right.
is
Right,
it
and are you pulling in and out, that type of thing, so you ain't even really seeing no return, this, that, and the third, like, bro, there's so many extra questions that that data allows you to ask, and it'd be nice to see what that data is because if I'm being real with you, bro, most people I know in the Black community, especially, they not really in them heavy hitters like that when it
Mhm.
come to crypto. They into if I'm sorry, like for a better term, but they into a lot of BS. They into a lot of BS. It's very few and far between. I will say I met a dude the other day at the barbershop that is in XRP, and he started the conversation.
I will say
So
I hear a lot of that. I've heard a lot of XRP, and I think XRP had a it was extremely popular 2018 through probably about 2022 or maybe 2020. When did they have it? When did they enter their case?
like 2021,
Okay, so about 2018-ish to 2021, XRP, a lot of people, that was my first crypto investment.
right?
So it makes sense, but we got to make sure that, for one, because the statistics also said that, yes, we have the most. That's for Black people. That's one of their first introductions into investing, and more Black people, that was their first introduction to investing in anything at all. But it also brings into question, the statistics showed that more Black people, for their first investments, are into extremely, extremely riskier investments as their first investments, which leads to them taking major L's in the stock
Mhm.
market. Brings it all the way back to education, knowing
Yeah.
what you're doing, not just investing in Doge because it's popular. not just going to wanting to invest in GameStop because that's what everybody's doing, not
Right.
wanting to just invest in these random things, meme coins, this and the third, because for that to be the case, you would think that black investors will be running the crypto space.
Right. You would think there's really no need for people to be talking, about educating minority communities, especially in terms of crypto and new age technology. You would think that these educational narratives or initiatives in these smaller cities, because there's one happening here. I mean, there's some initiatives to get AI and stuff like that going, crypto education, because that's what we're doing. Really active here in these smaller cities and smaller states. You would think people would be on, like, there would be no need for it. So that's when I hear people talk about this, especially older folks, they are so lost.
Their numbers are crazy. You see, I didn't even mention over 40. Their
Right,
You think our numbers are sad? Over 40 for black households, black Americans, it gets treacherous.
bro.
It
And
gets
and and that really goes to show you what our relationship with money is. That really goes to show you what our, because like when I talk to a lot of people about investing, it's always about, well, I can't afford to invest. And then when you break their stuff down, it's not that they can't afford to invest, it's that they're not willing to make certain sacrifices, one, because there's always sacrifices that come with investing, right? It's gonna take away from somewhere for the short term so you can enjoy more of whatever you're sacrificing in the long term. You know what I'm saying? But it'd be that, or the minute the market starts going down, they wanna put their money out. It's one of them two. It's one of them two. They either don't wanna necessarily budget for it and kinda, you know, make investing a habit, or they're very emotional. They see number go red, number go down. Oh, I'm losing money. I gotta take my money out, instead of understanding how to have their emotions in check. So um those numbers are impressive, but I don't think they're long. I don't think those investors are staying long term.
and this is why I say there's a difference between gambling and investing, and there's a difference between trading, trying to trade, and invest
Hmm.
for the long term. Because if you invest for the long term, the stock market has recovered 100% of the time, every time it's crashed.
Right. It always does.
May have
It
taken some
always
years,
does.
but it recovers every
Hmm.
single time. So when you invest for the long term, will your portfolio take some hits when we have economic downturns, recessions, things like COVID? Absolutely. But
Right.
that's all
My
investors.
portfolio taking a hit right now.
Everybody's is. But
Yeah.
the difference between ours and some of our counterparts is those are unrealized losses. We're not
Absolutely.
we're not selling at the losses. If anything, we're doubling down, and it goes to when we talked before about the VIX, fear and greed index. A lot of people want to buy when the markets are euphoric, when everybody's talking about it, when it's everywhere, when everybody's making money. You have to be able to have a level of confidence in the stock market and invest when things are ugly, when everybody's scared, when there's a lot of uncertainty. That's when you should have already had done your due diligence, picked out your companies, known about their fundamentals, been following them, knowing about your different crypto assets, reading the white papers, knowing what purposes they serve, looking at guidance, knowing what's
Hmm.
coming, not just right now, but in the future. We just watched NVIDIA see keynote. He's talking about stuff all the way going 4 or 5 years from now. They're
Bro,
giving
2028, 2029. Like, come on, man.
So it's like you have to know about those type of things. You have to be able to discern, okay, I know what's going on right now, but I know what's coming. I know where the industries are headed, because you can't get shaken out. We say that all the time. A lot of
Hmm.
people shaken out, a lot of people make silly decisions when it comes to the money, and that goes into another thing of why you don't need to be investing money that you need immediately. And
Right.
increasing the amount of money you make via education, via learning, via trade schools, via gaining other skills once you get grounded, like trading, like options, to accelerate the amount of money you make so that you can, invest more. But that's another topic. Today we're talking about 401k because when you're talking about 401k, this is something that, for one, if you don't have a job that offers 401k, you might need to go get another job
Hmm.
because I'm telling you, I know people in my life that are in that age group, 50, 59, 60 plus, still having to work. Trust me. You do not want to be
Right.
you do
Most
not
of my grandparents still working, dog. Most of my grandparents still working.
you do not want to be in that position, and it is 100% avoidable.
Absolutely.
100% avoidable. So I'm gonna need you to pull up that nerd wallet,
I
my
got you.
friend.
I got you. I got you.
And we just gonna play with some figures because the first thing I want to say about 401k is this. If you haven't started, start now. The best time to start is today. Don't wait. Don't wait another day. And if you don't know if your company has a 401k, you need to go find out immediately because compounding interest and your company match, that alone will make you a multi-millionaire once you get in your 50s, depending on your strategy. So put that current age. Let's start at 20. Let's start at 25. Let's start at 25. Let's say you get out of high school or college. High school, you go to trade school, go through trade school for a couple of years, or you get out of college, you get out at 25, get you a nice job. Boom. Let's say annual income. What should we do about 60, 60, 75? I mean,
Bruh, I'll say what I start. I started at 75 when I got out
okay, let's
of
start there.
college.
Let's start there. 75,000. And then let's say starting balance zero. You're starting from scratch because we want to make this as realistic as possible so people can actually see, what type of money they are leaving on the table.
Right.
Monthly contribution. We're not even gonna do nothing crazy. Let's say
Let's do a percentage based.
so.
Most companies will match you up to 6%.
So I mean,
So
monthly contribution is that would be our contribution, right?
yeah, like what we putting into it.
And that goes into another thing. Most people are putting in a minimum 2-3%. So we'll,
Right.
we'll do that first, and then we'll show you, what the difference is depending on the sacrifice you make now. So we'll start at 2%, and then employee match. That's crazy, 100%. I wish. Employee match.
Boy,
Employee match. We'll do about the average. I think the average is 5 to 8%. So you can change that. What's the one on top? Yeah, change that one. Change that one to 5. And
the
then
percentage of your contributions that your employer, yeah, they match 100% up to
okay,
5%.
all right.
Yeah.
So retirement age 67. So in estimated rate of return, yeah, like I said, I think the estimated rate of return is usually about 6 or 7%. So we'll do 6 on the low end. What's that figure?
401k fees.
No, well, we'll we'll leave that
We'll
out.
say 0 because they all different. They all fluctuate. They
Okay,
all
so
fluctuate.
look at that
By the
balance.
time you retire, you started at age 25, your retirement age is 67.
Mhm.
Given you're putting in 2% of your total income, so you're starting out making 75, 2% of your income is $125 a month. Your employer, that really don't matter. They're matching up to 5%, but because you're only putting 2% in, they're only matching up to 2%.
Mhm.
All of that, by the time you turn 67, you got 1.2 mil, almost 1.3.
And I'll tell you right now,
That ain't enough.
that it's not enough for one. And that 2%, you're doing absolutely the minimum. You're
The,
doing
the bare minimum.
You're doing absolutely the minimum. Put that thing up to, and this goes into the strategy. So let's talk through this. Okay, you start out here. This is where you start out. Now, this is what I was taught by my nana, and she has retired, multimillionaire. And I think she told me she started, her 401k probably around the age I'm at now, late 20s, going into 30s. So whenever you're talking about a 401k, for one, you want to increase your contribution gradually, whether that be through, if you get bonuses, get a bonus, you can put a percentage of that bonus in your 401k. If you get a raise, up your percentage, a half a percent or a full percent. Every year, you should be looking to increase your percentage. Now, this requires you to not get stagnant at a job. If you're at a job and your salary or your pay is staying the same for long periods of time, 2, 3, 4, 5 years are making the same. This is why we talk about education, getting other skill sets. You
Mhm.
want to be increasing how much money you make so that you can increase your contribution. So let's say now, all right, this is year one. You see, if you kept it here, you would still retire a millionaire, 1.2 by the age of 67. I'll let you know right now, 1.2 ain't gonna be 1.2 by the time you're 67.
On
Yeah.
God, bro, this may be like 700,000
And we haven't
by the
even,
time.
yeah, and we haven't even, he's talking about buying power. We haven't even factored in what you're gonna pay in taxes.
Right,
Haven't even
right.
factored in what you're gonna pay in taxes. So let's say now, the next year, now we make 80,000 and we're increasing our, or not even that, we can, yeah, 80,000, and then we increase our contribution up to 5%. We're making a little money, 5%. And I'll tell you right now, because I've been increasing mine gradually for the last 6, 7 years.
Mhm.
Increase it, as your money, as your pay increases, you don't even see it. You don't even feel
No,
it.
you don't.
Don't feel
You
it.
don't feel it at all.
And we'll show you the how
Bro, because
big.
5% of 80,000 is only $333 a month. So like if we was just at 125, let's do some quick math.
Mhm.
Minus 125. You increased your contribution by $208.
So you only made 5,000 extra dollars annually. You increase your percentage to 5%, and you increase your retirement account at retirement age from 1.2 to 1.9, almost $2 million. See the difference? Now, another thing, well, people might say, "Oh, I can't afford to increase, my contribution." Yes, you can. Let me tell you why. Because as you increase your contribution, the more money you put into your 401k. 401k is a tax deferred account.
Mhm.
So you're either gonna invest in yourself, put it towards your retirement, or Uncle Sam is gonna take it. The more money you put in, it reduces your taxable income for the year. That's why, once you start making a certain type of money, you see people maxing out those accounts. You see people getting into HSAs and other,
Right.
and other accounts like that.
Yeah,
So
because I think your contribution through that way for 401k is like six to $12,000 a year or some shit
I
like
think
that.
they just recently increased it, I think, and doing Biden,
Okay.
I believe.
Okay. Well,
Um,
that's good because 6 to 12 is kind of low.
yeah,
Like when you think of it, when you in the grand scheme of things, $6 to $12,000 is actually kind of low.
and you'd be surprised a lot of people don't even hit those metrics.
Right. Right.
So let's say you've been grinding, you got your degree, you went to trade school, you finally cracked 6 figures, you're making $100,000 annual income, and you say, okay, I'm gonna sacrifice, I'm gonna invest 10%. I'm gonna invest 10%, and my company, let's say you even get a better match, because my company total percentage they match up to 9.5. So let's say you get a great company, they match up to 9.5. Look at that.
Hold on. We was at 5.
Hmm. Went to 9.5.
That's pretty good
4.7. Y'all picking up what I'm putting down?
on me.
And let's just be honest. Today's time, $100,000 a year is a lot of money. We're not going to discredit that.
I mean,
No. Because we have to realize what the average salary is.
yes, yes. Based on the average salary, yes, I agree with that.
Now. Is it a lot of money in real life? Once you
No.
start to accumulate bills, houses, all of that, no.
Yeah.
Let's say, because we would hope that your money will be increasing as you get up there in age, you
Right.
know, and you will be paying things off. You really get the ball rolling when it comes to your retirement. Let's say you get your annual income up to $150,000. get that annual income up to 150, and things are you're starting to get closer to retirement age, or start out in tech or some of these other even trades.
Mm-hmm.
They're making money in trades. So put that annual income at 150 and put that contribution at 15%. And some people might say, oh, 15% sounds crazy. It's really not. I know a lot of people that do it. I think the highest I've had mine at a time was maybe like 12 or 13. But like I said, as my money increased, I'm trying to get to 20%. I'm trying to get to 20%.
That's crazy.
Look at that. And let's be honest, in the grand scheme of things, $150,000, it's not a crazy amount.
Nah.
150, put a 15, 7 point, and even drop that down because everybody, what you think the average employer
The
makes?
average is 6, bro. The
Okay,
average is
put that down
6.
at 6. You
And you
still
still at 6.5. That's not bad, bro. That's not bad.
So the point is, because I've did this before when I talked about the dividends.
Mm-hmm.
Move that age up. Move the age up to 30. Say you start when you're 30. What does it do to it? Still at 4.6. So as you can see, the later you wait, the less money you're taking off the table because you're putting your money in, you're employed. And another thing, at the very least, you need to be matching your company's employee match. You're
Right.
leaving free money on the table if you're not. I'm talking about you leaving money, free money on the table. So start now. If you haven't already, start immediately. Do not wait. Because time is of the essence. You're missing out on compound interest. You're missing out on that free money from your company. And on top of that, gradually try as hard as you can, whether it be, you know, letting go of certain luxuries.
Mm-hmm.
Try to increase your contribution every year. Even 1 or 2 times a year. I don't know how everybody's job is. You may get a raise once a year, twice a year. You may get bonuses. Try to put as much money as you can in there. Try to gradually increase your contribution. Try to gradually increase your annual income and start ASAP. Start ASAP because this is just the most simple way, the simple and the most easiest way to become a multimillionaire by the time you're at retirement age. And we haven't even started factoring in, adding HSA to this.
Right. Which is another investment vehicle if you use it right.
And then on top of this, don't just rely on 401k. Go start you an individual investment account. Invest
Mm-hmm.
there. If you're going to get in crypto, invest there. And a lot of people say don't take any money out of 401k. The only thing, that I would be okay with taking money out of 401k is to purchase a home
I agree with that.
because that,
Major purchase, yeah.
that in itself is another investment, depending on how you're buying, what price you're buying, all that kind of stuff. But that's the only thing I would advise, pulling out a 401k for, and just let that money grow. Let that money grow. Keep stacking it. And if you move companies, don't cash it out. Roll it,
Nah, just
roll it
roll it
up,
over.
roll it over to the next company. So the final thing I want to say is, because every company is different. Find out what your 401k is invested in and
Mm-hmm.
find out if you're able to pick your own allocations. Because before, my company had me in a target date fund. They had me in a target date fund. And when I looked at the the returns, it was mid, absolutely mid. And
Right.
when I found out, okay, I can go in here and pick my own. I can pick what my 401k goes into. It's been up ever since. So find out that every company doesn't allow that. Every company doesn't allow that, or they have a set you know pool of investments you can pick from. But even if that's the case, find out what it is. Go do your research. Look at the returns. Look at the fees, all of that kind of stuff, and find out what you're invested in. Because that can make a world of difference. That can be the difference of hundreds of thousands or millions of dollars between
Right.
letting it sit in a target date fund versus being able to pick something like VOO or QQQM or something like that. And another thing, this depends on kind of your investor identity. If you don't necessarily want to pick individual stocks, if they do allow you to invest in whatever you want, go the ETF route, VOO, QQQM, stuff like that, VTI. You can't really lose with that when you get into those large caps, and they will rebalance your portfolio. So if something's not performing, they'll go in, readjust that on a yearly basis, pay attention to those fees, and just invest, man. Start now. Start
Yeah.
now. There's no reason you should get to retirement age and not be a millionaire. We showed you the absolute bottom,
Bro,
2%
that's the easiest way. You
easiest.
really on autopilot at that point, bro. It's really autopilot at that point, and that's the good thing about it. So you don't really have to, be worried about the weeds. Besides, if you want to like change, something that matches your investment identity, like it's really easy. Um, but yeah, I mean, you mentioned VOO, BTO, that type of stuff. But um, I know we wanted to get into asset specific because really get into the advanced side of things, looking at the charts, stuff like that.
Yep.
Um, you know, is there anything in particular that you wanted to hit on that? Because when it comes to charting, I like to get into that. I can
So,
I can get into
so
that.
we'll do this. And this would be more for, possibly a individual account, or, if you have more of a desire, or you're at an age where you feel like you can invest aggressively, know what you're doing. One, do not go and start picking out individual stocks if you don't know what you're doing. You're not paying attention to the fundamentals. You're not following, these companies' earnings, and you're not, you know, paying attention to what's going on. I don't advise that. But if you are, I need you to learn, just the basics of charting. You need to know
Hmm.
about moving averages. You need to know about support and resistance levels. So that way you can identify trends. That way you can identify, where you want to buy. Things start getting shaky. You can say, okay, we in this downtrend. Maybe I maybe want to take some profits. You got to be able to read charts a little bit to be able to identify that. So I'll let you I'll let you talk to them a little bit about moving averages, which
I
ones you
mean,
use.
well, honestly, I started off not using moving averages at all.
Hmm.
I traded a specific style, and I still do. I still use some of its principles and stuff like that. What I've ultimately done, I've combined a lot of different strategies that I've learned over the years. So, one of the strategies, especially for my day trading, futures trading market, activity, I've adopted a multi moving average type of trading style. So I like the 21
Hmm.
moving average. That's basically the average of the last 21 candles. Um, and they operate differently depending on the time frame. So I like to look at, especially for long term investing, I like to look at the daily time frame, the weekly, the monthly time frame for longer outlook type of plays. For like the day trading stuff, I look anywhere between like an hour down to like the minute time frame on the chart. It really just depends on how precise I want to be with my entry. Um, but yeah, you want to understand moving averages because they essentially will help you tell how the market is going to move, how the market will react at certain levels. You mentioned support and resistance. Honestly, before you learn anything else in charting, when you get ready to trade, you better learn or at least have a good idea of what support and resistance is.
Hmm.
If you don't understand what support and resistance is and understand the levels and how they're always retested and they naturally are meant to be broken and stuff like that, if you don't understand those principles, then there's really no point in starting anywhere else until you get that down. So this little red line I put here is an example of a support line, turn resistance, in fact. So as you can see here, the candles have hit this level kind of frequently. You know what I'm saying? It was a big gap here, but anytime you see big gaps here, you always can almost always count for them to be filled and those levels to be retested. So the reason why I said that this was support turn resistance is because as soon as we came up here to this high and we tried to retest that high and we failed, price came all the way back down to this level, right? Retested it a few times. And then as you can see, kind of like right here, off in here, maybe I can zoom in a little bit. I don't know if y'all can see that all that well. But often here, price reacted to the EMA. So we tried to clear the 21. Usually, when you clear the 21, you might be on the up and up, especially going back to the upside. But as you can see, it reacted to my next EMA, which is the 2135, and it got rejected. And then it's been down and below the 21 ever since, except for like these little areas where it's trying to pop through. So that just goes to show you how strong the trend is. And you mentioned identifying trends. Well, price has clearly been within a downtrend for
Mhm.
AMD. We've been talking about that though. We've been talking about AMD. Not to sleep on AMD. It's a downward trend. They've been working on certain things, but just because that they're working on new innovative things, you're not always going to immediately see that reflected in price. Price is a lagging indicator to innovation, right? So the minute price meets or catches up to innovation, that's when you'll see things going to the up and up, in my opinion. And you can kind of see that happening here. Down here, we trying to pop back up. So we trying to break out of that trend channel. Will it happen? I don't know. I don't. Nobody can tell the future, but eventually AMD price is gonna pop out of this downward trend, and when they do, I guarantee you they're gonna try and retouch the top of this trend channel here. So you looking at an increase of from the low of this trend channel if we indeed break out of it, because I know we did um the top, it's all-time high. But from the breakout of the bottom of this trend channel to the top of the trend channel, you're looking at an 86.0% increase in your investment if you were to be entering at the bottom of this trend channel. So if it entered from if it really took off and began retesting these lows from here or these highs from here, bro, that's a pretty solid investment. You're looking at the price of Nvidia going from $103 to 175. In the world of stocks, that's a pretty good increase on price. That's a
Yeah.
pretty good move. So um wouldn't shake that off. And then I know we was charting this earlier. We was looking at what it would look like if it tried to retest all time highs. Well,
Right.
like we said, current price is $103. All time high was like $226. You're
Yeah.
looking at 139, almost 140% increase from the lows of this trend channel.
Okay. So I like this angle you got put up right now. So this is what I really want you guys, just to understand from a basic perspective of why, you need to be paying attention to and at least knowing what moving averages are. So do you see that upward trend?
Yeah, this right here. Yeah.
As you can see, the candles are above the moving averages.
Mm-hmm.
And when you look and we go back to the downward trend, the candles are below
Below.
the moving averages. So there's a lot of moving averages. You can get into simple moving averages, exponential moving averages. Just to make it simple, just like so for a midterm moving average, simple moving average, you could use a 50-day. A longer term is a 100-day, and then even longer, you use like a 200-day.
200. Yeah.
Like short, medium to long term. So you will set these EMAs, and granted, based on everybody finds different ones that they like. You may do a 9-day EMA, 20. There's a lot of different ones. But once you get your style, and we may do another video, we might just do a night where we're just going over charts and kind of like showing them like which EMAs you like to use and why, what things you look for.
Right. I
You
mean,
know,
I'll go ahead and tell you why I like these EMAs, and I can read them off here. So I use the 21, the 34. I said 35 earlier. It's the 34, the 55, and the 89 uh, exponential moving average. And the reason why I like using those is because those are the Fibonacci levels. So I'm trading consistently with Fibonacci in mind.
now you gotta tell them what that is.
Like
Gotta tell them what that is. See, that's why I said we might need another
well,
video.
yeah, we're gonna say that for later. We'll get into that later. We'll get
Yeah,
into that later. But there's a reason why I use those, and it's because they trade along with the Fibonacci retracement levels. We'll get into what that is later, but that's why I ultimately landed with this. And I didn't come up with this strategy. I was taught this strategy. So I went, sought out mentorship, things of that nature. Guy that I ended up getting schooling from, he put me on game with this EMA strategy. But
mhm,
like I said, I've been taught by another person who used a totally different
yeah.
strategy, and I still
Oh,
utilize what he taught me in that.
all right. So why you got this pulled up? Okay, so we've talked about you see the downtrend, you see the candles are below the moving averages, and then you see the uptrend, the candles are above the moving averages. So that's just a simple explanation. Now, can you show them a clear support? What would be a support and resistance level on this chart? Or if you got a
Yeah.
different chart that may have a better.
No, I mean they all pretty much look the same. Yeah. I mean we'll use NVIDIA. Let me zoom out and get this right. Okay, so this green box is really the golden ratio, but it's currently acting as a solid level of support too. So what support is in very very simple terms is a level in which price will always revisit and try to stabilize, right? It'll always try and stabilize there. Now, you may, especially around support levels like around here, you can see it break a little bit and recover like it's done here, right? So even though it's broken this support line and didn't go much further, but it did make a lower level here, it still came back. It still retraced back to the support level. So you can see price kind of range often in the support levels because again they're trying to stabilize and big money institutions like to use support levels as accumulation levels. This is where they are stacking that position up for that particular asset, and that's typically where you see me stacking up if I'm being real.
Show them where we don't buy.
Where we don't buy personally is in space, and what I call space is when it's gone ridiculous, right? It's gone ridiculous. We're not buying at the tops. So personally, I would not have been buying at the top of this trend channel for Nvidia, which was, let's see, all time high at least from
150.
this trend channel was 153, 154. I'm not buying that. I'm not buying that. I marked up this golden ratio for a reason. So I was waiting for price to come in in this zone for me to begin accumulating this position, right? And even if the price of Nvidia goes lower, I know roundabout where it can find stabilization again, which for me would be this next red line, which is also the bottom of the upward trend. So this is where that upward trend really kicked off, right? So I would be accumulating here and I would be accumulating at this level. I personally would not be buying in space, if you will, between those two levels. I would wait for price to actually break, and when price actually breaks, I kind of pause on my buys
Mhm.
and then I'm gonna wait for the move to be completed because while that move is happening, I'm day trading that move. I'm not accumulating for the long term during that move. That's just my strategy personally. So once we've gotten out of space and we've gone back to a support level, quote unquote, that's when I'd be buying again for long term usage. That's just me though,
And
not financial advice.
this brings up another topic that I want to hit on. Now, he just told you, how he will play that, his strategy. Another strategy to play it, and this is, some people feel different ways about it, but dollar cost averaging.
Right.
Now, if you believe in Nvidia for the long term, 5, 10 years for this example, and your dollar cost averaging, say you're buying every week, every 2 weeks, every month, you may be buying at different levels. You know,
Hmm.
you may have bought at the high at a particular time, but then you catch different lows, you catch different levels, and yes, is it the most efficient way? No. But when I want people to be building out, the habit of investing, or people who are just not working with big sums of money, I think dollar cost averaging over the long term can be very effective. You know,
Absolutely.
that yeah. So what would you best say?
I mean, you lower your average buying price by DCAing,
Yep.
right? And most people aren't looking at charts like we are. Most people they're going to do a DCA strategy, which is totally fine, right? Because at that point you're not worried about the highs or the lows. You're buying regardless, right? And all in between. You're buying in this space, right? On the way down or on the way up, right? If you're DCAing. Now, for me, who's a little savvier, now I do DCA some assets. I'm not going to sit up here and act like I don't. I leverage DCAing strategies my damn self. So I definitely see no problem in doing that. But different asset classes I may buy differently. I DCA in crypto, no problem. Always doing crypto. In stocks, though, I may do or I may um adopt a level based strategy where I only unload amounts of cash or capital at
Uh-huh.
certain levels. So for me, I'm unloading right here. I'm loading up on Nvidia shares at this level. I'm just put that out there. Same here. If it goes down to $90, I would be unloading
And
personally.
definitely you see where you have that golden ratio and you show where it dropped slightly below it and then came back up. See stuff like this when we're talking about paying attention to support and resistance, when we're talking about paying attention to different levels, paying attention to trends, you would know, okay, people always ask, when do I buy? When do I buy? You're looking at this chart, you see, okay, Nvidia, they're going up, they're making higher lows, you know,
Hmm.
they're starting to come below, those moving averages. Okay, they came below the moving averages. Now we're in that golden ratio. Okay, I can start buying some shares here. They break below that golden ratio. Okay, it's really buying up. It's really buying time.
Right.
These are
Right.
prices. If you zoom out, we haven't seen those prices below that golden ratio for a minute
Yeah, bro. We haven't been below this price
since the
since
last.
July of last year.
So you're looking at, when we're talking about buying opportunity, that's why I say it's good to at least be able to look at these charts at a very basic level to be able to know when to buy, when to accumulate. Like he was just talking about his strategy. If you're going to wait, and buy pullbacks, 10% pullbacks, 20% pullbacks, 15, whatever it may be, you have to be able to know how to look at these levels and be
Right.
able to, identify those zones in which you want to buy in. If you're not going to dollar cost average, to be a little more, surgical and get them snipes.
Man, because honestly, Nvidia at 115 is a good price.
And you see that on the last one when they get
Yo.
below that.
Yeah,
So
yeah. Yeah. And I missed it. I missed this. Because like I said, I'm not buying this. I'm trading that in space. Right. So I mean, I guess I took advantage of the opportunity just in a different way.
all right, so one more thing I want you to pull up for the people that, I want to start utilizing support and resistance right now, while I'm learning to read these charts. Can you pull up bar chart real quick? Barchart.com.
Yeah.
I'm gonna show y'all another resource you can use to find, support and resistance where it's at, kind of like at the current level or whatever stock it is. I'll show y'all another because I'm feeling generous today. Feeling
At
generous.
that. All right, I got that. Let me.
Man, we really cooking today, dog.
Nah, bro. They'll know one of these
All right.
days. They'll
So
know one of these
type
days.
in NVIDIA up there in that search bar. Yep, right there. And then scroll down. It's gonna be on the right side of the screen. Scroll down, scroll down. This got a lot of great information on it too, but I'll leave that for another day. A lot of great information. If you look down there, you see that key turning points, that box over there. No,
Yeah, 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 yeah. Okay.
right there. This is another place you can go to look up key support and resistance levels. If you don't know how to read charts, and you can do this for many different assets. So you can go and see, okay,
See, I'm not too far off. They say first support level is 113. We at 115. See?
it show you,
Mm.
you look, pay attention to where you're at, and this will adjust, of course, daily. You look at where you're at, and then you can see, okay, if you're thinking about, buying, if that price, say we're at our first support level, and you're like, okay, I want to unload, and we're at the current price is at 113.60. You're like, okay, I may not buy here because if it breaks below, then maybe I can catch it at 111. If it breaks 111, maybe I can catch it at 109. And the same thing when it's running up. If you run up all the way to a certain price and you're thinking, okay, should I take profit? Vice versa. You got to know the support and resistance. So this is just an easy place for you to go. If you don't know how to read charts yet, to be able to go and find, just some close a close range of support and resistance from where the price currently is.
No, that's solid. I didn't know nothing about this.
Hmm.
It's pretty good and not too far off with the charting too. So I pat myself on the back.
Hey, and pay attention. Don't be minding them 52-week highs, man, unless you dollar cost averaging.
Yeah, no, that's crazy. Because if we click on that, your 52-week high is 153. And if we go back, I wish it was easier to swap back and forth between screens, but we'll figure that out. If we swap back over to the chart, we said that high, yeah, we said the high was at like 153.
Yeah,
So, I mean, that yeah, like we said, man, that's a good resource because at a glance, you can kind of just look at it at a glance, and then boom, you can make your decision off of that. Or if you know how to read charts and you kind of want to do a more of a technical analysis of it, you could definitely come in and hit it with a little line like I did right there. That is definitely a resistance level because you have many resistance levels off in here. Like I would say that one. So 129, almost 130 is probably a resistance level.
yeah.
Uh, we'll say 140 is a resistance level, and then of course 153 is a resistance level. So
So go learn that, man. Go learn that, and then when you play around with it, you can pull up, have bar chart right on the side, to test and see. Okay, am I seeing what I think I'm seeing?
hmm
And compare it to those levels. So sometimes you gotta do self teaching. Sometimes you gotta do self,
right
and it just require putting in a little bit of work, a little bit of research.
on me. I mean, nah, you putting them on game today because charts can be technical, man. But if you learn this trade, man, you could eat forever. So definitely something worth adding to your bag for sure.
Mhm.
But like I said, man, Nvidia, in my opinion, not financial advice, is a good buy here. But I wouldn't be shocked if we saw it go lower to like I said, this next support line, $90. So that's a generational buy there.
For
Last
sure.
time we saw $90 for Nvidia was back in August of last year.
If you just watch the keynote, they data center business, they supercomputer,
Bro,
robotics, AI agents, they're not going anywhere. Don't pay
right.
attention to the noise. Hey, this ain't financial advice, but like if y'all been rocking with me, you already know how I feel about Nvidia.
I mean, and there's a lot involving crypto also in the same vein as AI. So definitely about to put out a video later this week explaining one of my top investments and their outlook for their 2.0 build out of their network that is heavily centered around artificial intelligence. I'm definitely excited to make that video. So stay tuned on that. Stay tuned on that.
For
But
sure.
with that being said, bro, any closing remarks, bro? Because that's really all we had on the docket, man.
I mean, yeah. Hey, go follow me on YouTube. Go follow me on YouTube because you know the game I just gave today when we're talking about bar chart and all that kind of stuff. I've done many videos giving out all different types of resources, that I found through, my years of researching and studying the space. Some resources I've had to pay hundreds of dollars for, upwards of thousands of dollars. So, come follow your boy at BCL Media One on YouTube. Definitely gonna be some more videos out later this week. We're gonna be, just diving into some fundamentals, man, because that's where people need to start. The fundamentals, actually knowing what you're doing and being a smart, intelligent investor.
Right. Um, for me as well, I mean, follow the YouTube channel, AFHD. Got a exciting interview with a builder, actual developer in the crypto space, coming up later this week on the 20th. So I'm excited to put that video out. I give a lot of game related to crypto, where it's at, where it's going, some things to look out for. I don't really get into the technical stuff. I save that for more private things, but I'm always good to give game around that later. We'll be getting more into some DeFi strategy stuff on the channel too. So if you want to not just buy and hold crypto, but use it as a passive income generator, definitely might be some content of interest to you because it's always some ways to make bread out here, no matter what's going in the market. So with that being said, man, it was a good one, dog. We cooked. That's 2 pods in a row. That really, I say our last pod was one of our best pods. I'll say that. But this one, I mean, it's up there. It's up there for sure. It's up there for sure. But bro, with that being said, man, we'll catch you in the next one. Peace.